If you guys are able to join us live, if not, hope you enjoy watching the recorded one. Got my Sunday best hat on. We're ready to go. So today I want to talk about rates. We're talking a little bit about inventory, millennials, and they kind of a new trend. Maybe we'll see if it's a new trend. We'll see if it takes. We'll see what everybody's thoughts are. But let's just jump right into things. I gotta stop showing you guys that slide at some point. But seriously, get used to that number because that 3 is here to stay, I think. So all right, hey Jeff, how's the market? All right, let's jump into it. The lockbox activity for Oregon, week over week, up almost 11%. If you look back kind of to the far left on that graph, Oregon is trending slightly ahead of where we were this time last year. So again, this is every time Gene and I go and show a house, we pop up in the lockbox, grab the keys, it registers. So there you go. We are definitely trending back up. You see the little ice storm blip from a few weeks ago, and but yeah, up a good amount over prior year, and then we got about 1 or 2 more weeks of nominally being over prior year, and then we're going to have a couple of months of significantly over prior years from the COVID. So this is the humbling moment. We're almost at the 1 year mark when all this kind of tanked and cratered. And all right, so let's move forward. Let's get depressing now. Washington side is pretty much the same thing. They're up 5.5% year over year. They're pretty much where they were this time last year. So they're on pace. Market's just kind of cruising right along. So everybody's kind of hanging in there very well. So there you go. That's kind of your general highlight of how things are going in terms of active showings. All things considered, given we've got a fraction of the inventory we had 1 year ago, not bad. Right. So we're seeing probably every house that's out there and probably seeing them twice at this point. So, all right, let's talk about the big news that's going to impact everybody as you're looking to buy. And to some extent, it's going to impact you as you're looking to sell, because I think it is going to start kind of cooling, kind of pumping the brakes a little bit, if you will, on the frenzy of the buying side. Rates are on the march. So here's your trend looking back. And yep, sorry, I placed the slide perfectly where my little title bar is going to block off the timeline. But looking back, 5 blocks. Rates. You see the trend has popped up. They popped up to kind of that 3, call it 3.25 mark, settled back down, flipped back up. They're volatile. That's kind of your key takeaway. So whether they stay sort of that average rate of 3.29, if they blip back down to 3 1/8, they go back down to 3. Bottom line being, I think there's a key number to be focusing in on, which is 3. I think the gravitational forces are going to be there. So as they do jump around quite a bit, I just think that number is here to stay. Now, if you were here, I think last week, 2 weeks ago, we talked about one of the big things that's going to be driving mortgage rates right now is basically fears or concerns over inflationary pressures. All right, as inflation is expected to go higher, or at least as we continue to talk about the fear of inflation, that's going to keep kind of psychologically pushing those rates up because people are going to be forward pricing them in. So all eyes really are on inflation and what's going to be triggering that. Again, this I stole this stuff from Riley again. One of our key lenders puts out a great newsletter for this stuff. It basically just says inflation is kind of what everybody's looking for. It's kind of that demand on the economy. It's going to be the enemy of the rates, right? As inflation goes up, it's going to be pushing those rates up higher. And everyone talks about this fear of hyperinflation. Now, not everybody buys into that, but people are looking at the fact that it's been a stalled economy for a long time. So what happens when things start to open back up? What's the timeline for upward pressure on rates, inflationary concerns, so on and so on and so forth. So let's connect a couple of dots here. If you've seen some of these other articles, one of the things that's kind of pushing home sales right now is people aren't traveling. They're not buying expensive things. They not going out to eat as much. People are saving a ton of money right now due to the COVID kind of shutdown, if you will. So $1.6 trillion in the past year. We're going to skip the 3 shocking facts because anyway. So people are saving at record paces. So what's been doing that now is people have been taking those record savings and putting them into down payments for homes, right? And they're factoring in, okay, I can now afford to get a house because I paid off some debt or I've saved up the cash for a down payment, whether it's some low percent, 3.5% down, 10%, whatever. They've saved the money and they have been buying homes. So for now, they've been saving a lot of money. So that's great, right? Until you think about now you've got this money is all going to be spent at some point, right? Whether it's homes, which some of it will be for houses, but a lot of it then, once the economy opens back up, Look at the second paragraph there. Many economists are predicting the lockdown lifting will see the biggest boom time in a generation, ushering in a new era of the U.S. economy. Sounds great on paper, right? When this stuff opens back up, boom, people are going shopping. The economy is going to boom. Things are going to be hovering. Things are going to be cranking. Everything is going to start skyrocketing, right? Because people are going to be going crazy with it, right? So seriously, get used to the 3. It's not going away, I don't think. I think as those floodgates open back up for the economy, as people start spending again, it's the inflationary pressures on top of the heightened federal spending we've been seeing for the stimulus payments and all the other things related to COVID. I think it's all going to start coming to a head. I just think rates are we're going to be 3s for a while. Whether we get through a full year in the 3s, and we're not talking about 4 until next year, maybe later part of next year, time tells. Who knows? But I think if you're holding to your guns of I'm going to wait for the rates to blip back down, I should have locked that 2.5, 275, and you're going to wait for it to come back again, I just think you're going to lose that bet. Meanwhile, we're going to start seeing the other side of the coin, which is supply and demand. The housing market is just not there. So we don't have as many listings as we had a year ago. According to this article, we're down 200,000 homes compared to a year ago. And this is before we really start factoring everything else in. So we don't have the houses, even less than we did a year ago. So with inventory down, the prices are up. This is a highly competitive market. Now with rates going up, we talked about this probably a month ago, 6 weeks ago, we talked about what we call the cost of waiting. As your rates are going up, your home prices are going up. Essentially, by testing to see can you catch a bounce in the market, can you time it? Can you then kind of score that deal that arguably you probably should have tried to score a month ago? And it's a losing bet. That's probably the only way I can put it, because you're trying to catch 2 things. You're trying to catch a rate bounce that's not really going to come probably, and you're trying to catch a housing price bounce, which is absolutely not coming anytime soon. So that said, it's not all doom and gloom. It's still even at a 3%, 3 1/8. It's still super cheap money. Just get the 2 number out of your head, because we're at the psychological hurdle now of that 3. 3 is still ridiculously cheap money to be buying, especially on a 30-year basis for a home. So it's all good. The prices, yes, they're going up. Yes, it's absolutely crazy. No, it's not going to stop anytime soon. I think the rate of growth will slow as the rates pick up, and we'll get more inventory coming online and so forth. So we'll see that pressure come off, but I don't see home prices coming down much at all. If you're looking for corrections, obviously, if you look at the long-term price growth charts we share from time to time, you always kind of see those little kind of blips along the way. And so you may catch a little blip where we're pick a month and we're down, 0.5%, 1% from the prior month, or whatever the case may be. We'll see those from time to time. There's no question. It always happens. But it's going to be that 1 month blip. And really, is 1% going to be a meaningful occurrence for you? No. The home prices are going up. So really, I think if you're sitting on the sidelines waiting to try to execute some master plan to score the best deal you can, this is the advice I would give my mother. I would give my grandmother this advice. Don't do that. It's not going to work to your favor. We are seeing heightened competitive pressures across the board, whether it's entry-level homes, or even at the over $1 million homes with second day on the market with multiple offers and losing with 50 grand over. It's a crazy market right now. So do what you can, and we'll go from there. Now, we'll talk about 2 trends. The second trend, we'll see if it really happens, but the first one, it is geared towards millennials. And this story came out, it got published, that 44% of millennials would buy a home from the photos alone. 2 things. First of all, if you're looking to list a home, make sure you're working with somebody who's going to spend the money on high-end photography, the 3D Matterport tours, publishing a floor plan, as much detail as you can get online. Make sure you do it. We do that for every one of our listings, and here's why. People are starting to pay attention more and more to the digital presence of your house. So whether it's floor plans, the photos, they need to see what your home is before they want to buy it, because in some cases, they'll buy it without ever stepping foot in your house. And I know I'm going to pause for all the heavy eye rolls, and some of you are going to hear that part and go, that's not really whatever. It's some dumb article, Jeff. I did it 3 times last year. I'm on my 4th one right now of clients, out-of-town clients, looking to buy based simply on photos, the 3D tours, then I'm walking through the house for them, and we're doing a Zoom call, and we're putting out offers. So these are not speculative people. These are people who are looking to buy their first home. They are going to live in it. In this case, it was $1 million home. They're not afraid of it. So this is, I think, a real trend that's coming. So you just need to be aware of that. It sounds a little crazy, but it also makes it pretty easy since people are doing it from afar. The interesting part also in this article, they talked about they're showing the kind of the percentage of millennials that can afford a 20% down payment in their preferred price range. So the y-axis here, I think kids check on that one. The up and down axis is the various price points. And then obviously, going across is then what percentage of the people can afford a 20% down payment for millennials within those price points. Across the board, I think you can appreciate the lowest number on here is 13% for people who are shopping at 250 to 300 range can afford a 20% down payment. All the way up to that 450 to 500 price point, I think it's too small, but 44%. So almost half millennials can afford a down payment at that price point. And obviously the Portland area, we're a little over 500. So look at those last two bars. And if you're a millennial buyer in Portland, it's almost half of them can afford a down payment here, which is kind of crazy. But let's think about it. For the past year, they haven't gone anywhere. They're not doing anything. And things that people want to mock them about kind of over the past years as kind of the stereotypical thing of millennials, living in mom's basement and all that. Maybe. And they've saved a crap load of money. Now they're ready to buy houses. So if you're discounting millennials at this point as a force in real estate, you're losing it. You're missing the mark on this one. You need to be catering to this population of people. So again, the photos, the videos, the virtual tours, everything and everything you can, because this is how they're going to look to buy homes. I see it happening. I'm doing this with them. It's crazy, but it's real. So there you go. The last one. Now I'm going to let you guys judge this one yourselves. A 3D printed house. So in this case, it's a home for sale for $300,000 somewhere in New York. And it's just an article talking about people trying to kind of introduce the fact, with soft lumber, doubling in value because of fires and just kind of the general commoditization of building supplies. The cost of building a home has skyrocketed across the nation, certainly in the Northwest. People are trying to figure out cheaper alternatives. So a 3D printed house. So I'll leave that up to you as to whether or not you would ever entertain buying that. I think the initial immediate reaction to that one is, no, God, no, I would never do a 3D printed house. That's crazy. I would also then submit for consideration going back, say, probably not quite 100 years ago, but close to it, probably, probably 70 years ago, 80 years ago. It used to be you could buy a house prefabbed, basically, sold to you from Sears Roebuck Company. So Sears would sell you a house. And that, in hindsight, it sounds absolutely ludicrous and crazy. And I would tell you, go drive around Northeast and Southeast Portland, see if you can find them, because they're all over the place. And they're still standing, and they're great. 3D printed, I'm not there with that one yet, so I'll shop the Sears house, but maybe not these guys yet. But we'll see if that's a trend that's still coming. Maybe it's not. Who knows? But so there you go. Your key takeaways. Inflationary concerns are there, right? The three. I don't have the three again, but those rates are probably going to be here to stay. If we can bounce back to the high twos on a bounce, lock it, grab it, because I think it's a short-lived fantasy. Otherwise, that's your update. It's crazy, but it's all good. It's keeping us busy for sure. All right, that's it. Have a good week. I'm 13 minutes in. I'm setting records now. Have a good week, and we'll talk to you guys next time. Take care.